Kia ora. This video is going to take you through completing your income tax assessment for those that have properties subject to residential property deduction rules. You'll notice the IR3 income tax return includes fields for residential property. This is Amelia. In the 2019 to 2020 year, Amelia owned 2 residential rental properties and earned a salary of $85,000. She decides to treat the properties as a residential portfolio. Amelia earned $50,000 in rental income from both the properties. Amelia's deductible expenses for both the properties totaled $60,000. The new residential property deduction rules cap deductions for an income year to the amount of income earned from residential property. Amelia decides to use the residential property deductions worksheets to help her calculate the amount she needs to enter into her income tax return. First, Amelia wants to know which version of the worksheet she should use. Amelia visits the Inland Revenue website to download the worksheet document. Amelia answers the questions on the first page of the worksheet document. The best worksheet for Amelia to use this year is Worksheet A. Since Amelia is treating her 2 properties as a portfolio, she only needs to complete the first column of Worksheet A. The columns on the right are the totals that Amelia will enter into her income tax return. The income and deductions from both Amelia's properties are combined, allowing her to calculate her excess deductions for the portfolio rather than 2 separate properties. Amelia does not have any excess deductions from a previous year because this is the first year that the new rules apply. The 2019 to 2020 return has this field greyed out. This means that Amelia's total residential rental deductions is the same as the expenses amount she entered at Step 3. At Step 8, Amelia calculates the net income or net loss for her portfolio. This year, Amelia has a net loss for the portfolio of $10,000. In Amelia's return, she enters 0 as her net residential income because the amount of deductions she can claim is limited to the amount of income she earned from her residential properties. The amount of the net loss for Amelia's portfolio becomes her excess deductions carried forward to the next income year. Step 12 has different instructions depending on whether your property has a net loss or a net profit. Since Amelia's portfolio has a net loss, she answers Step 12A. This gives Amelia her residential rental deductions claimed this year. Amelia is now ready to fill out her IR3 income tax return with her residential property information in My IR. Amelia sees that there's a new section in her return for residential property. Using the amounts from the far right column of her worksheet, Amelia completes question 22 of her return. Amelia is filling out a paper return, but she can also file this return in her My IR account. Last year, Amelia would have been able to use the excess deductions against her other income, like her salary. This year, Amelia cannot do that. She must carry forward the excess deductions from her portfolio and use them only against income from that portfolio in future income years. If Amelia's portfolio had earned net income this year, Amelia would not have had any excess deductions to carry forward. Let's say her income was the same, but she only had a deduction of $40,000, giving her a net income of $10,000 from her residential portfolio. Her return would look like this. Amelia's situation is pretty straightforward, but if she had any questions, she could check out the notes to the worksheet, the IR3 guide, or the rental income booklet, IR264. If you still have questions around the residential property deduction rules, we suggest talking to a tax professional.